the beginning. I spent a number of years. I led the European consumer business for Amex. I was at Lloyd's Banking Group at the time of the last financial crisis, and led a number of businesses at Lloyd's. And then I spent a number of years here in San Francisco at Wells Fargo. And I would say that while I think the intentions are good in the traditional financial services industry, and they want to do a good job, they also have to satisfy their shareholders and their regulators. But I think that there's a general slowness because these businesses have become so big, and their ability to innovate and drive innovation at pace. They also are operating on legacy platforms that really inhibit their ability to utilize data, to develop products quickly. In some instances, like some of these big banks, they have to do like 800 integration tests before they can even launch a product. So it's just, that is just an inhibitor. So there's structural barriers inside of these more traditional institutions that are slowing them down. And so then you look at some of the sort of the newer players out there that are moving very quickly, as I described, focusing on consumer pain points, using new technology, using data in different ways to be able to solve those problems for consumers. And they're growing rapidly because I think you have a whole new generation, two new generations. You not only just have millennials, you have Gen Zs now that have a very different way of looking at the world, and their expectation of what a good service looks like, how they interact with brands and companies is very, very different. And so I think that you're seeing this sort of sea change happening, and COVID really helped to bring to the forefront some of the social inequities that were happening in our society, whether it's through, the high levels of unemployment and the financial pressures, or just even the impact of the pandemic on the health of communities of color. And I think that people have just sort of said enough is enough. And what we're seeing with many of the customers that we're serving, that just finally said, what, I'm done with being mistreated, and I want to go to an institution that actually is built to help me and support me. And so you're seeing what I would call almost like a tipping point occurring now. I mean, we've talked about this for a long time, but consumers are really now talking with their feet, and they are switching to digital banking solutions. And so I think there was Novantas did a study that said at the start of 2020, 5% of millennials said that they had a digital bank was the primary bank. By the end of 2020, that number was 15%. And the millennials are the largest population in this country. So the extent to which consumers are actually moving across and building relationships with some of these new players is sort of unprecedented. And for Varo and for my team, we're excited because we're actually a legitimate bank. So if consumers want to move to a new bank and they want to go to a player that is fully digital and offers all the modern products and services and capabilities, but is also an OCC regulated bank, we're kind of in a really great position right now in terms of how the market is evolving. So it's going to be interesting to see how the next few years play out, because I do think there's this widespread adoption. I think there's been a lot more focus on using technology and data to drive innovation that is focused on the consumer problems that need to be solved. And so I think you're going to see a lot of change. I think if you fast forward to 2030, the top 10 banks and financial institutions might look quite a bit different. I do think the very large incumbents are going to put a lot of money against making sure that they don't lose their ground. But I do think there's going to be a lot of change happening over these next sort of 8 to 10 years. So a few things I would speak to. One is I do think the world is becoming more digital. I think that you're going to just see that things that had been done in a more kind of analog, maybe face-to-face way can be done, very conveniently using new technologies. I think there's been a convergence of mobile technology, AI, how we use data, cloud technology that allows companies to be able to dramatically lower their costs. So things that may have been very expensive will start to become much more affordable for people. And so that is going to drive a shift. I also think just the way we work, I think that there's going to be much more of a kind of hybrid working environment. I don't think that you're going to see this huge rush where everybody's coming back to the office. I mean, I happen to be in the office this morning, but like 5 people here. It's not like we're like all back at work. And I don't know that I see that that's going to happen anytime soon. I think it's going to be a much more flexible working environment, which then impacts people's lives in terms of how they think about childcare and how they think about, their social lives and all the rest of it. So I think it's going to, we're entering into a new age. And I think COVID has accelerated some trends that may have taken place over sort of 10, 15 years. I think that, adoption of new ways of working, new ways of banking, new ways of traveling, new ways of entertaining, like all of these things are happening at a much faster pace. Fintech is a big word. Like, in other words, there's a lot that sits under that. So you've got, companies like mine, which are, challenger banks that are really looking to, kind of capture and earn the trust for the primary banking relationship, and being able to deepen that relationship with a fairly wide range of products and services. Then you have groups that are focused on more narrow parts of, like, you have insure tech, and you have wealth tech, and you have, people that are just focused on lending or cash advance. And so there's other sort of more point solutions. I think those point solutions are going to probably have perhaps a harder time as new entrants like ourselves that are able to rebundle a lot of that. Like, we talk to our customers and they don't want 12 apps on their phone. I mean, if they can actually manage their financial life with a single app. So I think it's going to be interesting to see what happens there. But then you also have services like, money movement, remittance services, peer-to-peer payment services. And, so the likes of PayPal and Venmo and Cash App, they've gotten very big, and they've had, really large adoption. And I know that they're looking to try to diversify into other services. And then you have the whole kind of infrastructure part of fintech. So whether it's around banking services or lending services, platforms that are helping to solve, some of the infrastructure needs using some of the technologies that I talked about, whether it's cloud or mobile or APIs, and using data in different ways. So I think there's a lot that's happening across the board in different parts of the industry. I do feel like the kind of fintech 1.0 was a little bit around infrastructure and point solutions. I think fintech 2.0 is now about, kind of rebundling some of those and scaling some of those solutions. And I think fintech 3.0 is going to be around who has the most sustainable business model. And, so I think that the jury's out around how many of these companies are going to actually have a sustainable economics, so that they're going to continue to get the support from investors and public markets, because you can't lose money for forever. And that's part of why, I mentioned earlier, clearly have an eye towards generating our own capital and being a self-sustaining business. And I think as we get into the sort of the next few innings of this, this is still early innings. I think we're probably in, the second or third, I think you're going to start to see a need to demonstrate sustainable economics over time. And I think that's when some of the, good ideas might start to falter a little bit. I think there's definitely going to be a role for it. It's beyond just blockchain. It's also thinking about different forms of currency, thinking about central bank digital currencies. I do think we're starting to enter a period of fairly widespread adoption. While the use cases are still somewhat limited, I think they're going to start to expand. There's been quite a bit of investment in these technologies, and now that central governments are paying attention to this, you're starting to see the formation of more stable coin type currencies. So I absolutely think that this will be part of the evolution. I'm not quite ready to put a precise prediction, other than that this is an area that will continue to evolve relatively rapidly. And I think it's an area that Varo will participate as well in a sort of safe way. Our customers, we do not want to put their money at risk, but we do want to give them options to be able to participate in a range of activities that they are interested in, and that could potentially help them in their financial lives. So I think it comes with a lot of education and making sure that customers are aware of the risks, particularly if they're going to invest in any sort of alternative type of currency. And then from a blockchain perspective, I think the technology itself has some interesting applications, particularly you think about international remittance and other things that could potentially be enabled. Also, just just within the platform itself. Can the blockchain technology be an enabler to allow exchange of value within our own community as we're building out the Varo community? And so these are all things that we're exploring and are going to be looking at testing and learning. And as we've done right from the beginning, working very, very closely with our customers to identify the solutions that are most relevant to their lives. I think that you're going to see a number of players in different spaces. I think there's, players in certain verticals that probably make sense, like let's say insure tech and mortgage technology, that I think are going to drive a fair amount of disruption in those verticals. I think you're going to have players like ourselves and potentially, you've got Chime, which has gotten, it's gotten very strong product market fit in the US. There's others around, Revolut and Nubank and others around the world that are getting strong fit with their customer segments that are going to continue to become a much bigger force in the broader kind of banking scene and the kind of core rebundling of consumer relationships. And then I think you're going to have a number of players like, you've got Marqeta and Galileo, others out there that are working on infrastructure. We're working with Temenos as a partner of ours. I think Visa is actually doing it as an incumbent. I think they're doing a really nice job in terms of driving innovation within their platform. And so I think you're going to continue to see that sort of platform innovation occurring. So fast forward 10 years from now, you're going to have new names on the marquee. I think you're going to see different players that are solving customer problems and earning customer trust in different ways. And you're going to start to see scale, which I think is something that you've always, it's been interesting to see early adoption, but then when you start to move towards mass market adoption, the economics start to change and the influence of some of these players start to change dramatically. I mean, Square is another example, which I think they've done a really nice job, and they've been at it for a while now. I think they've been 12, 14 years, and they're achieving a level of scale that really gives them more influence in the industry. And so I think that you're going to see more players like that over the next decade.